Good morning, everybody. It's the 25th of October. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Taff. Good morning, guys. How are you?
Morning.
Morning. Very good. Thank you. Have we got a new Prime Minister now, or
Yeah.
is there another one?
Yeah.
No, not since after Rishi.
Oh, right. No,
No,
he's lasted. Well, he's not actually Prime Minister yet. He'll be Prime Minister around midday today.
I
for
saw a
like a month.
chart. Yeah, I saw a chart yesterday, and it showed like a downward projection of how long Prime Ministers have lasted in
Yeah.
office, and it is a line, and the next Prime Minister should last minus 200 days if
Right.
the chart plays
Oh
out.
That's the
goodness.
measured move, is it? Measured move
That's it.
target.
Yeah,
Less than a year.
yeah. No, minus
Good luck,
200
Rishi.
days. Like not 200 days, minus 200
Oh,
days.
minus 200.
Yeah.
It's
Yeah, below
goodness.
zero. I mean, it can't go
Uh,
below zero, just like oil.
Yeah. Yes, as we know. Okay, let's get into the latest headlines then and what's moving markets over the last 24 hours. So yesterday we had some data out from the Eurozone and that confirmed that we're in recession territory. The Eurozone manufacturing index declined to a 29-month low of 46.6 for October from 48.4 in September, which is below expectations of 47.8. There was a sharp slowdown in new orders growth, while business confidence remained weak. Supply side shortages eased, but there was still strong upward pressure on prices with much stronger than pre-pandemic inflation pressures. So the data reinforced unease over the Eurozone outlook. The US business confidence was also showing some vulnerability. The US PMI manufacturing index retreated to a 28-month low of 49.9 from the October number of 52 and below the consensus forecast of 51. So there was a slightly increased cost burden, but output charges increased at the slowest rate since December 2020, and significantly, there was a sharp decline in business confidence for the month to the lowest level in over 2 years. The US yields moved higher on the back of all of this. So despite weaker than expected US data, treasuries were unable to make further headway, and the 10-year yield settled slightly higher, just above the 420 level, 4.2% level. Higher yields limited the scope for a significant dollar selling or for significant dollar selling during the day. In terms of what's going on with the UK, Rishi Sunak has been appointed as PM after being the only valid nominee in the Conservative Party election. The former Chancellor will formally be appointed today. And UK recession fears on the back of this have intensified. The latest UK PMI business confidence data recorded a decline in the manufacturing sector to a 29-month low of 45.8. There was a slide in new orders on the month, and the overall business confidence slumped to a 30-month low amid underlying fears over the outlook. So Rishi is being stuck straight into a difficult situation, as we saw also with Liz Truss. So let's see if he can stabilise and provide some confidence to the markets. In terms of the SMB, finally, they continue to withdraw liquidity. The Swiss sites deposits posted another sharp decline in the latest week. The previous week, so that was down from the previous week, and the fourth successive sharp drop in deposits as the national bank continued to drain liquidity from domestic money markets, so having an impact on the Swiss franc also. So that's it for the latest headlines. Let's take a look at some charts. Taff, do you want to kick us off by taking a look at commodities?
Let me start off with gold. Just share my screen here. Yep. So I'll kick it off with gold. All right. So we had I'll start off from this Friday candle that we had. This bullish candle with momentum being driven from this demand zone, this 1615 to 1621 demand zone. Momentum came in and pushed price all the way up. Yesterday, I was looking for price to really come up and test this this highlighted zone, this 1672 to 1679 zone, and price did do that, and we've got a menacing candle, bearish candle here. It looks like it's just barring the bulls from going up. Let's see what that looks like on an intraday basis. Here we go. Right, on an intraday, I talked about this sweet spot here that I just highlighted, this circle spot here, and I said this would be a good place to put your long trade. Yeah, the trade wouldn't have worked out, but it shows that there's demand here. As you can see that we had a cluster of green candles here, but we didn't have enough momentum to push price all the way up to that first resistance. What I'm looking at today is really I think the money spots is really this first support is 1641, and again the first resistance zone at 1672 to 1679. I think the reaction that we get here will pretty much determine the direction of the day. If we break this on good momentum, then I think we're going to have another bearish candle as a follow-up to yesterday's candle, and then we pretty much target the second support zone at 1615 to 1621. If we come here and price rejects and we have some sort of bullish reversal candle, then probably we'll have a good bullish day, and we'll be looking to target the first resistance zone at 1672 to 1679. So it's pretty much it can either go bullish or go bearish here with gold. But I'm looking for price to really just be kept by the first resistance and the second support uh, zones there. That's on gold. Let's see what we're looking at with crude oil. Um, we've had, I think, including yesterday's candle, I think we've had candles that were just pretty much opening and closing right at about the same area. That shows indecision. And yesterday's candle again, it did the same, and then it did a bit of bearish momentum. They closed lower than where it opened, and we've got a resistance level here that I put. I think it's 1815 or so. I think we'll look at it on an intraday. It looks better here. Okay, here we go. Yeah, this is what we have. So you can see that what's happening with prices, we're getting into a compression zone here. Price is being compressed. We've got a cap, trend line resistance cap here, and then we've got another trend line support. Yeah, so price is really being put in this compression zone, and then when that happens, usually the breakout will come out. I talked about this level here, this sweet spot here. I said this could be a good spot again to take your longs, and yeah, the price did come and then it was rejected, but it didn't go all the way up to the second resistance as I'd anticipated, because of this trend line that capped all the gains. What we're seeing today is we're seeing price failing to capture this first resistance at 84.96, and you can see we touched it here, we touched it here, we touched it here, we touched it several times, but then if price just failed to capture it, and now we're seeing a rejection from that zone. I think it will be kept. Price will be kept on the downside by this trend line resistance here, trend line support. But because we're in a compression, we could break out. We could break out to the top. We could break out to the bottom. So it's really neither here or there. But what I anticipate is again for price to be kept inside the second resistance zone, which is 87.14 to 87.70. I think this will be the max, and then the second support level, which is 81.42. So if we do break out here, I think this will be our limits in terms of where price goes today on an intraday basis. This 81.42 and the second resistance zone. So it's something to watch out for here. It'll be quite risky to take a trade here because of the closeness of the resistance trend lines that we have, trend line and the post support trend line as well. So I'll probably wait for a breakout to really do something meaningful here. Let's go to nat gas. Nat gas finally had a correction yesterday. We had I think what five consecutive days of just bearish momentum, and price then finally came to this this highlighted zone here, which coincides with our previous swing low, I think June swing low. I expanded this zone slightly. I expanded it to really just put in the price action of these candles here, the 30th of June candle and this 5th of July candle. So it's wider than it was yesterday, but that is just to show the emphasis on it looks better on an intraday. So it really just shows how the price action really could not really overcome this zone. We had a bit of bullish momentum here. Price came down, came up, came down, and then yesterday we had a really nice looking bullish candle. It just broke out of this channel that was respected all the way from up here. It was respected, but yesterday we broke out of it. So it's a sign that look, the bulls could be in it, and they could be pushing for a major correction of this downtrend here. So what I look for today is because of this impetus that we had, I would look for correction. I'd look for price to come down, get liquidity. The ideal place would be coming close to the support, to the upper boundary of this zone here, which is your 5.49, 5.50. Get some liquidity here, and then probably continue, and I'll target my first resistance, which is the 6.00 level here. This is a significant level, not only because of because it's a round number, but I think it was respected again on the daily. If we come here, there's a time when it was respected here, somewhere here, when we had this this inverse head and shoulders here. So it's a zone, it's a level that I would really look for and probably target, or even use as a pivot. If price breaks it, I'll use it as a pivot, and for another bullish momentum to go all the way to test the trend line that we have here. So today I'm looking for price to really be kept in between the first support and first resistance, with my buyers being slightly bullish, but looking for dips to come all the way down here, and then taking the long. Let's go to Bitcoin. Bitcoin had a bearish candle yesterday. Okay, with a bearish candle yesterday on Bitcoin. But what's interesting is I talked about this level, this 19029 level here. Price respected that, and we had another level, this 19300, which was a cap, I think, for Thursday. But Friday momentum just came, and then we broke through that level. And since it was resistance, when price comes down, it becomes support. Yesterday, it seems price respected it, and I think this is where we're trading currently. Let's see what that looks like on an intraday. So on an intraday level, on an intraday basis, we've got this trend line here that was respected several times, and then price broke out of it. And I spoke about yesterday. I spoke about this sweet spot here. I said, look, this would be a good place to take a long, because it's basically price coming down to retest the breakout zone of this trend line. It didn't really quite work out, because the bulls didn't seem to have enough momentum to push price all the way up, but we seem to be trading at that area again. I think the first support here, this 19300, 19300 or 19309 level, being quite significant. You can see there's a cluster of like indecision, almost like price really doesn't know what to do here. So it tells you that there's something going on here. So really, we could break this first support. We could also break this, and then price could target come all the way down here to the second support here. So it'll be a continuation of yesterday's bearish candle. We could break that, and then price will be kept probably by the second support at 19029. This is quite significant, as I alluded to previously here. Or what could happen is we could find rejection in terms of bullish momentum. Price could reject this support level, and then reverse, and then we could come all the way up to the previous swing high here, this 19697, and then even go further up to the 19878 level here. So I mean, if the bulls are strong enough, we could see that. If the bears are strong enough, then we could see a breakout. So it's a place of really of indecision here. But I'm more inclined to see probably I'm more inclined to see probably a candle wick, a fill of this bearish candle, a continuation of this bearish momentum that we saw from yesterday. So I'm more inclined to see a break of the first support, and possibly target the second support as our target zone here. So yeah, I think that's my view on Bitcoin. I'm mildly bearish on Bitcoin, looking to target probably 19029 today. All right.
Taf. Cheers. Okay, let's take a look at FX then. So dollar index first up, still trading in a very strong bullish trend overall on the daily. If we take a look at price action over the last few days, we can see that it's been quite choppy. the ranges have certainly increased somewhat. Yesterday we posted a doji candle, so highlighting indecision, and it looks to be finding some support around 111.80-ish. Overall, still bullish, but not ruling out the possibility that it could pull back to the trend line and to these multiple support levels that we have here around 110.05. So overall bullish, but room for correction, I think, on this. And then once we're at that level, obviously if the buyers don't step in and we do see a breakdown, then we would break this bullish trend and potentially form a double top pattern. And that could obviously have implications across the FX world because everything's been led by the dollar now for a considerable period of time. But overall, it still remains bullish. Looking at it on the intraday basis, we can see this intraday trend that's formed, or this support, sorry, at 111.73. We've got it on the intraday charts. It seems to have done a pretty good job over the last couple of days. This red line I've highlighted down here pretty much lines up with the long-term trend support. So I think that would be the key level to watch. See what sort of reaction we get if prices do eventually get down to that level. But looking at it from an intraday perspective, just on the basis of today, this support level is holding, and therefore we could see a continuation, or certainly price continue to stay within this range for the time being. Looking at euro US dollar, let's just go back to the daily chart. We can see again it's trapped within this bearish channel, but it is edging ever closer to a test of the upper end of the boundary of the bearish channel, and we have some resistance around here as well. Multiple levels, but also we've got parity in this zone as well. So that may be a key level that traders are watching and may encourage some further selling. If we can get a break of this channel and take out some of these resistance levels as well, then that may signify that we formed some sort of short-term bottom and we can expect a decent correction to the upside. But we need to see more before we can get too excited about that. For me, the bearish bias exists still, and I'd be looking to sell into rallies really up to parity and see what sort of reaction that we get. If we do obviously get a big breakout, then that could trigger some short covering, and we could see a pretty substantial rally to the upside. So do have a tight stop if you're going to look to fade into this resistance levels. Looking at, I'll come back to sterling in a minute. Let's look at the US dollar, Japanese yen. So we had this big reversal candle that was posted on Friday following the intervention from the Bank of Japan. Yesterday we recovered most of that, got well above the 50% level of that reversal that we posted on Friday. As things stand at the minute, it's very flat, so a bit of indecision, but overall the trend remains very bullish, as we know. So no real signs of that slowing down as things stand at the minute. We take a look at dollar CAD. That was quite interesting. It's rallied into a major level of resistance here between 138.37 to 138.55. Obviously, we've got a high here that was posted as well on Thursday, the 13th of October. But we are stalling at this level, maybe in the process of forming some sort of top. So that may indicate that we'll see a dip lower. Certainly, while this resistance level remains in place, there is the threat of that. In order for that to be negated, I think we need to see a pretty clean break above these levels and for prices to continue moving higher. I will now take a look at, unless there's any requests for anything else, but I'm going to take a look at sterling and just have a look at how that's reacted following the appointment of Rishi Sunak. So I think markets were buoyed yesterday initially by the confirmation, if you like, that Rishi was going to be made PM. I think he was probably seen as the most stable candidate to try and assist the economy. We saw an initial push up, certainly with sterling versus the Aussie dollar. Looked like it was forming a bullish flag, but we pretty much closed back within this flag pattern. So kind of negating that really. And it's a little bit lower today. So not really getting the follow through that we would have liked. Ultimately, we've got these resistance levels up here at 181.26 to 181.99 that need to be overcome before we can get too excited about that. Looking at sterling CAD, similar kind of situation, a lot of indecision really. We are hovering around a resistance at 155.53. Need to see a decent break to the upside to confirm this kind of bullish momentum that we've seen and maybe indicate that we've got a short-term bottom in place. Sterling Swiss, these charts are all looking quite similar really at the minute. Just kind of a bit undecided, but you get the feeling that if they can break above these resistance levels, then they may be able to move into this white space above and really start to have a bit of a go at a recovery. Sterling yen, that's into resistance as well. a lot more defined on this one. We can see there's levels going back to April 2022 that have held the price, and that continues to be the case. Big long-legged doji posted yesterday, so lots of indecision. If we can see a break above this level on a closing basis, ideally this high that we posted on Monday the 17th of October, then that would indicate that we may be in for a bit of upside in the short term. And if we take a look at cable lastly, we can see that yesterday we posted a red looking candle. We gapped to the upside, filled that gap, and so far today very undecided about where we want to head next. Cluster of resistance levels that we need to overcome between 114.10 to 116.00. If we can get above this level and also simultaneously break out from the downtrend resistance line, then I think that would offer some encouragement to the bulls, but we need to see a little bit more. It doesn't appear as though the markets are overly convinced. Maybe Rishi's comments later today will help soothe the markets, and sterling in particular, and maybe we'll see some upside advances. One thing to point out actually before we move on is the gilt market. That had a really strong move yesterday to the upside, up by around 3% at the close. We've got some resistance here at 1062. This is the iShares UK Core Gilts ETF. So a pretty good barometer of what's going on with the UK gilt market. But I've highlighted on here the potential for a double bottom. We opened up a bit higher today. We're up by 0.83% as things stand. We did go as high as 1076. If we can get a close above this, then that may indicate that we've got a short-term bottom in place in the UK gilt market. And that would certainly be encouraging for many, many people and indicate that the market likes the fact that Rishi Sunak is the PM, and he is already, just by being there, soothing the markets. And obviously now it's down to what he lays out in his plans about where this market heads next. Over to you, Steve.
That sounded very sort of like positive, actually, your whole analysis there. I was like listening to it and I was thinking, you're sort of talking about breaking to the upside and a bit of relief for sterling and things like that. I sort
Feeling
of
bullish.
Are you? I mean,
Yeah.
I can't get that feeling yet. I'm sort of like thinking there's got to be some sort of catalyst to break this anti, well, it feels like an anti-sterling route that we've had. Even that looking at that chart you're showing at the moment, I actually thought for a second it was a yield on a gilt.
No, it's the price.
10.58.
Yeah, not quite.
I actually thought we're not far away. So I'm going to share my screen, and before I dive into the charts, I want to sort of like talk about obviously Taff talked about the, let me just see if I can share the right screen. Taff talked about oil and gas, and I know that we're coming up to a time where gas prices, home prices should have gone up, shouldn't they?
Goodness.
So yeah, so this is my bill last month from my energy supplier. Estimated annual cost of electricity 2,700, gas 3,200. I mean, it's fucking ridiculous.
Yeah.
So anyway, but then this month's bill, estimated electricity is $5,000, gas is $6,500.
It doesn't make sense because like the price, the wholesale prices are going down. Why isn't there an adjustment? You know, it's been down like 40% already from the wholesale prices. So and
Steve,
this
how
is
big is your house if you've got an 11 grand energy bill for the year?
Well, this is it. My house hasn't actually, fun enough, hasn't actually grown in size over the last 3 years. It's just stayed the same. But my bill, I mean, my bill used to be, the annual bill used to be for both $2,500 a year, and that's only going back 2 years. So I've gone from $2,500 a year to, there you go, $11,500 a year. But they've obviously put a cap in this month. So it's not, it shouldn't be that, but that's not very nice to see, is it? Don't send that to me. But it's just forewarning me that they're sort of going to be pillaging me over the sort of like coming months. So that's a real concern for me to see that number drop through the door. And I'm not going to be the only one in the UK that's going to get that sort of thing through the post. Well, it doesn't come through the post; it comes through my mailbox. But anyway, that's another story. But anyway, let's move back onto the markets. But that's a bit of a shocker. So I'm not having it. I'm not having it. I'm going to switch off the electric, switch off the gas, and I'm not going to pay. So anyway,
winter is coming.
Might have to grow some hair to keep your head warm.
I know we're entering the dragon age again. Winter is
Yeah,
coming.
winter is coming.
Yeah, King's Landing doesn't look sort
Mm.
of as safe as it used to. Anyway, let's talk about the turnaround we've seen in equities, because you know what I'm like. I've got a bit of a beef with the FTSE as well, with the gun to head trade, but we'll talk more about that later. I talked about the turnaround, this corrective formation, or this bottom formation that was put in place, and we had another really decent day yesterday. Price action broke higher, but last week we had this Marabuzo candle, which is a very positive candle, and that offers support around about the 50% of that candle, and we didn't get anywhere near it. It just, prices had a little bit of a dip. I think it was while we were on the show, had a little bit of a dip just after the show, and then rallied quite strongly. So looks pretty positive. That was the Dow. We talked about the 4-hour chart where we had this potential double bottom, which we looked like we broke out to the downside, but it was a head fake. And the big rally back up, this 4-hour candle from Friday from 2 o'clock, basically negating all the negativity in the world, and pushing higher. And it looks like further upside is really expected there. If we get, let's try and get some fibs involved. So the fib I'd take from this swing high here down to here, and we're trading around about the 50% Fibonacci retracement level. The 50% one, it's an okay fib level, not quite as reliable or as interesting as the 61.8. That comes in at 32,100, just below there. And that would be interesting because we've seen sort of like a decent reversal from just above there previously. And it's sort of like been quite a like pivotal level in the past as well. So I think it feels like more upside, unless there's anything that really sort of like breaks on the headlines. I'd expect this to continue higher. On the Nasdaq side of things, doesn't quite look as merry as the let me get another. Let me see if we've got a 38.2. Yeah, the 38.2 is obviously a decent one as well. So the Nasdaq really sort of struggling. It's having a nice bounce. Maybe it's going to be an ABC correction, and we could see it all the way up to 11,685. That would be a 38.2% fib retracement. So it is positive. I am saying it's positive. Remember these lines, these words, they could be infamous. And further upside is expected over the coming days. I don't know if it's too early to talk about a year-end rally, which we normally get. There is a major collapse coming. Winter is coming, but winter may not come until maybe the end of the year. So let's drive on to the S&P. S&P sort of like got up to quite a pivotal level as well. We can see got some nice resistance coming in at the highs, just around about the 3,800 level, 3,800, and really sort of like a break above there should open up a nice measured move higher. Now let me take a look. I definitely had some extra things drawn in. Can't remember where it was. Really just highlighting again in the Dow the double bottom, the measured move of that double bottom. We can get it from here. Measured move is 32,330. So the measured move is all the way up here between the 61.8 and the 78.6. So I wouldn't be surprised if we do get further upside this week. Now, jumping across the pond, let's take a look at DAX first. DAX's candle yesterday, I drew this sort of like bullish channel in. It took the lows of the 3rd of October, 13th of October, and we were able to match it quite nicely with the highs of the 4th, the 18th, and the 19th. And we can also drag the 24th of October into it. So yesterday's price action got up and stalled around about that resistance. Again, if we place a Fibonacci from the previous swing high, we can see the 61.8% fib comes in at 13,146. So over the next few days, what's that? Friday 28th of October, maybe pushing towards that sort of them sort of levels towards the end of the week. So again, good positivity on here. Must have caught something from Joe, because I'm talking quite positively about the indices. I'm not sort of saying, but overall, you know my view on it. We've got further downside to come, but you're going to get these technical rallies in the meantime. But for me, it's a load of hot air, I think. Finally, FTSE. Inverse head and shoulders on the daily chart. I really like this. Expecting a move higher yesterday. That played out nicely. I'll let Joe disclose how the gun to head trade got on, but Stevie O'Hare isn't very happy.
You down as a winner, so
You have me
now
down
I've
as a
just
winner.
looked at the chart. I just see that your stop loss was bang on the low of the day. So
Oh, right. Break it
and
to me
I had all
gently.
this big spiel because we were hitting new equity highs on the basis of your winner. But can we find another price provider to see if it hit that low to confirm?
Yeah.
Go on, have a look.
No, I don't know, mate. I did look. Don't worry. There was a few that didn't hit my my stop level, but unfortunately, I was analysing that chart and can't do anything about it.
No, we've got to be
Open, honest,
transparent and
act with
open and honest.
integrity.
Yes.
Yeah.
The oath that we've sworn to the CISI. Yeah, okay, so let's move on then to the gun to the head challenge. So this is where we pick 3 trade ideas each day on the video. All the ideas that we come up with must have stops and targets. They're all placed at market and they have risk reward ratios in excess of 2 to 1. The ideas will expire at 9 p.m. UK time or when the stop or the target is hit, and they are published up directly to our TradingView profile. So let's look at the trade idea in question from Steve yesterday. He was looking for a strong reversal on the FTSE, which is very uncharacteristic for Steve. He doesn't like buying indices, but he did on this occasion. It was a nice pullback that he was buying into yesterday on the FTSE 100. If we click the play button, where I was getting confused is that the red of the risk area is kind of hiding the fact that it did actually make a low at 69.12, which is where Steve's stop loss was. And from that point, it reversed almost vertically in a straight line towards his target and would have been a nice 3R winner. So if anybody did follow that idea and managed to hold on to the trade, we'd like to hear from you so we can verify it for our own results, but sadly we're going to have to note that one down as a stop out, which
sucks,
is sickening. On to my idea. I was looking at selling gold, looking for a bit of a rollover on the intraday price action there. Didn't really go anywhere, to be honest, after that. As you can see, just kind of hovered around the same sort of level. I think it was 0.18R on side at 9 o'clock, so I'll take that down as a win. And Taff, you traded on
I had Bitcoin.
Bitcoin.
I had Bitcoin. So it didn't really do much as well. Just
let's have a quick look at Taff's idea. So he was buying Bitcoin, and I think you were half an hour on side at 9 o'clock. So we'll take that. That's 2 winners. That would, if Steve had come in, put us at a new equity high on the P&L. So I won't bother showing that now. I need to readjust my numbers, and we'll have another crack at that today, and hopefully we can put that right. So 3 trade ideas coming up. I've got one ready, and because I've got the screen, I'm going to show it now. It's actually a trade idea on Litecoin today. So looking quickly at the daily setup just to see what's going on. We can see prices are very range bound at the moment. We broke out of this wedge, and since then prices haven't really gone anywhere. If we look at yesterday's price action, it was not great. We posted a pretty strong day on Sunday, actually. Reversed most of that on Monday, and I still think the overall bias is bearish. And if we look at the hourly chart, what I highlighted today is the potential for a bearish flag taking shape here. So we've seen what actually encouraged me to this is I scroll back to the left hand side, and often you get these annotations that you've done previously, and it's amazing how sometimes they work so well. So this was a level that I'd highlighted God knows when. This must have been back in early October or mid-October. Had this level highlighted as a potential sell area, never got there, so obviously forgot about it. But prices have come back to that level, and it's worked almost perfectly before a strong reversal lower. So quite encouraged by that 53.96 level. If we look at the price action since, we've seen a big move to the downside. We've seen prices consolidate, and it looks to be forming what I would say is a bearish flag. It needs to confirm this, so we need to hold on to the losses below the lower end of the flag set up for another 25 minutes, and if we can do that, we'll confirm the flag pattern, and we'll be looking for a move down towards 50.52. So my trade today is selling at 52.56, on Litecoin with a stop loss at 53.13, targeting a move down to 50.52, giving me a risk reward ratio of 3.35 R on that today. So I'm going to get that posted up. And if anybody wants to follow its progress throughout the day, you can do so on our channel at Signal_Center. Who wants to go next?
Yeah, I'll take it. So I'm gonna give it a go with Bitcoin again. I think I'm gonna bet on this bearish candle that we had yesterday. I think a continuation of that bearish momentum that we had. But on an intraday basis, we seem to have a triangle formation here that is forming. So I'm looking at a breakout to the downside of that triangle formation. So I'll be selling Bitcoin at market, which is 19,296. I'm looking to take profit at 19,032, and my stop is above that triangle at 19,397 with a risk to reward ratio of 2.6. So we'll see how that goes today.
Luck, Taff. Steve, over to you.
Well, I'm going to look at gold. If we look at the, let me get it up. Come on. Yeah, look at the daily chart. Shooting star candle yesterday after rejecting from the major resistance. Still in the downward channel. Shooting star on the 4-hour chart. Nice spike up to 1670, and yeah, you can see the same sort of like reaction on the shooting star formation on the 1-hour chart. So I'm going to get short around about here. My stop has to be, I have to give it about probably $10. And my target to the downside, kind of squeeze another, yeah, 1621 is not a bad target. So I'm going to go for a 2.5 to 1 risk reward on this. Selling at 1646.5, targeting 1621.5 with a stop at 1656.5. Selling gold XAU USD for an intraday move lower.
Okay, best of luck. So those 3 trade ideas, if anybody wants to check them out. In terms of what's happening for the rest of the day, there are a couple of data points out that need to be aware of. So in 22 minutes, we've got the German IFO index number. Then at 3 o'clock UK time, we've got the US consumer confidence number. So that will be well watched as well. Overnight, we've got Australian consumer prices. So our latest read on inflation from Australia. That's at 1:30 a.m. UK time. Throughout the rest of today, we've got earnings from Coca-Cola, Microsoft, Alphabet, and Twitter. So some heavyweight hitters there on the earnings side of things. So keep an eye out for that. I think most of those are coming out after the close. So that will be around 9 o'clock UK time. And then for the rest of the week, we do have some central bank action from Canada, the ECB, and Japan. So that is that for today. Anything to add, gentlemen?
No, all good.
Good,
yeah.
man.
Okay, no further requests on the stream. Thank you everybody for watching. I think that takes our viewing to over 30,000 streams now on TradingView. So we really do appreciate all the support and people watching on a daily basis. Continue to get involved, and we'll do our best to cover any markets that or questions that you guys may have. And until then, everybody have a great day, and we'll be back tomorrow morning.
Yeah,
Bye.
I'll leave you with this.
Yeah, that's a good parting shot.
Interesting, Steve.
Steve's
Interesting, man.
$11.5 grand energy bill. Thanks, everyone.
Cheers.
Bye-bye.